Okay, everyone, welcome back to the channel. Matt with Green Bar Trading here, and we are about to head into 2023. So first, I just want to thank everyone for watching, for supporting the channel. Hit that thumbs up for the video. We have a Discord group, great community, bouncing ideas off each other and holding each other accountable for their trades, and it's a really good source of information, and that link will be in the description. So going into 2023, I think that what you should do as a trader is look back at 2022, see where your success was. And now there's so many programs. I mean, you could use your broker. You can look at where you found success, where there's possible holes in your strategy, and then the whole market conditions, right? The market structure that we're currently in, and then formulate a plan going forward. So, that's everything that we do on a daily basis in our community and on these videos, especially these weekly watch list videos like I'm making here today. And it's the first one of the year. So it takes a lot of research. And, that's what I've done. We've had a couple of days off here. It's been nice with the family. And, Happy New Year to everyone out there. And let's get right into it. So the earnings for the week. Nothing here is really that exciting for me. You have Walgreens on Thursday. You have Constellation Brands on Thursday. Other than that, I'm not really that concerned about earnings this week. Now, I think one of the most important things going forward is going to be earnings season. And, as a trader, if you're new, if you've been trading for a while, earnings season is, it could be a very volatile time, as a lot of analysts, market participants are waiting for these reports to come out from the CEOs and where they see their businesses going. And it's never been more important, I feel like. Now, I know we say this all the time, but this year, what most people are waiting for are analysts to lower the earnings for the S&P 500. So revise earnings down. They can't do that until they see earnings reports or get word from the companies that they're following that, we're not really hitting that target. Sales are lower, and we've seen a little bit, but we really haven't had that earnings recession yet. And until we see that, we just have to, wait and see. And that's what can really provide a very volatile environment in the stock market. So anyway, these are the earnings. This is our Discord group. Like I said, only $99 one-time payment if you're interested in joining a trading community for 2023. We would love to have you. All right, so we're going to start here with the sectors, and I want to look at the year. So unless you've been living under a rock, energy has totally outperformed the market. Now with the S&P down 20%, energy was up 40% on a one-year relative performance. That's really, really good. Year to date, 40.2%. Utilities, very close to that break even, which I know it sounds crazy, but that's a huge outperformance on the market, right? If you had a market down 20%, NASDAQ down over 30%, and you have utilities only down 2%, consumer defensive only down 5%. These all outperformed the market. Even financials outperformed the market, even though they were down. So going into 2023, let's see if we can see some continuation with some of these that outperformed in 2022. And that's what I'm going to be looking for going forward. So that's the sector's performance right here. You guys can take a look at that yourselves if you want. Energy, obviously the clear winner. All right, now going over to our economic calendar, and I feel like for the year, like we saw last year, the economic calendar is going to continue to provide a ton of volatility. It's just the way it is right now. As you know, we're kind of at the Fed's whim of seeing the data on these big economic events like the labor market right here has the jobs numbers this coming Friday, which is going to definitely move markets. So, you know, we just have to kind of wait and see around these numbers. You're going to get big moves, big swings, and then the next day it could go the other way. So it's going to continue to be very volatile because every data point that comes out, the market participants are going to be thinking of the Fed. Now, everyone is thinking we might see a Fed pivot if we have a recession this year. You know, I'm in the camp where I think that there's a possibility because we still have a very strong economy at the moment. We have seen some prices coming on down, you know, not the services sector, but in other areas of the economy, we've seen inflation come down. So, you know, and we still have a very tight labor market. People are still making a lot of money. I think that this recession that everybody is talking about is actually going to be pushed back a little bit. So most people are calling for a recession in the first couple of quarters of the year. I'm kind of in the camp where I think it could be maybe 8 months out, 12 months out even. So that's going to, you know, keep the Fed very hawkish, in my opinion. Like I said, what I'm telling you guys is just the research I've done and just what I believe might happen. That doesn't mean it's going to happen. But you have a lot of pros that are saying the first half of the year we might see a recession. So that's what they're saying. I kind of think it might be postponed a little bit. Usually recession kind of sneaks up on you and it's a surprise. This has been the most telegraphed recession. If you turn on anything, they will tell you exactly when it's going to happen. And I just think that, you know, most of the time when so many people are saying one thing, there's a chance that it doesn't happen exactly how they say. So anyway, that's just my thoughts. And this is just, you know, the most important economic calendar event is going to be that labor market. And that's the jobs number there on Friday. All right, so let's just take a look. I want to show you guys something that I'm talking about here with the earnings forecast. So this was from 1 month ago from JP Morgan. Now, JP Morgan is a very well-respected name in the stock market. When they say something, a lot of people listen. So what they're saying here is that the earnings per share for next year in the S&P 500, they're saying 205. That's down 9% from the 225 that a lot of people, the consensus is basically saying. They also think that the S&P 500 could retest lows in the first 6 months of 2023. All right? And then they can see a year-end rally back to 4,200. We're currently around 38, 3,900, right in between there at the moment. So, you know, it does seem like the market for the coming year in 2023 is going to be volatile. There might not be much upside as far as the equity market goes. I think that it's going to be a stock picker's year where you're going to want to find really good values. You're going to want to be in safe areas of the market. And, you know, I do believe that since the Fed is still going to keep rates higher, and they're going to keep them there for a while to get that inflation down. They want to see 2%. And I'm going to show you guys how they calculate that in a second. But we're not there yet. We're not even close. We did come down a lot. Inflation did peak. It is on the way down. But that first drop from a very high level is usually the easiest one. And then it gets a little more sticky, right? It takes a little time to get down to that 2% that they're looking for. So, if that happens, tech probably won't do well again. So, unless you find some good values, tech companies that are trading at good PEs, historically low PEs you want to look for, and making a lot of money and still having some growth. All right, that's the only tech that I would be looking at right now for 2023. So how does the Fed find out, or what do they look at to get that 2%? They look at this number right here. Now, when the PCE reports come out, the markets move a lot. All right, we've all seen this before. If you've been trading in 2022, you know that these inflation numbers, the CPI, the PPI, the PCE, this is the Fed's #1 inflation economic data that they look at, and it's the core. So the core is just excluding food and energy. That came in November at 4.7. All right, so 4.7, this came in November, still much higher than their 2% target that they're looking for. All right, we did come down a lot. I get it. We peaked. We're on the way down. That's good. But it's still a far way off. So they're just going to have to continue to keep those rates higher. So it's going to make borrowing a lot, more difficult. And, debt will definitely be an issue. So that's what they look at. That's what the Fed looks at. This is where we are now, 4.7. Keep an eye on that core PCE. It comes out every month. And like I said, these reports are going to give you a ton of opportunity in the market. The volatility is going to be huge. So just be aware of that. All right, let's take a look at our compass, the SPY. All right, this is the daily chart. This is where I start all the charts every time we do these videos. I want to see where we've come from. I want to see the trend and some indicators that I look at. If you're new to these videos, this is the indicators I have, the 20 EMA, I have the 50 SMA, and the 200 SMA. These are my 3 indicators here that I look at to determine and predict future market moves. And it's done a very good job this entire year, along with technical analysis. All right. So we can see here, and this is what they would call a death cross. The death cross happened in right here at the beginning of March for the S&P 500. I think it happened a little bit earlier on the tech, on the QQQ. I'll go over that in a second. But what a death cross is when a shorter term moving average crosses under a longer term moving average. So the 50 crosses under the 200. That is very bearish sign when that happens. Now, what is going on here, you can see the 50 moving average is now heading up, the 200 is now heading down, and these can possibly cross at some point in 2023. And that would signal a little bit more of, a better sign for the market. Now, it took a lot of pain, right? Since this death cross right here, the market is down about 10% on the S&P 500 since that happened. Much worse on the NASDAQ. I think it was down like 25% since that death cross. So that's what that is right there. Something else I look at is when the 20 EMA crosses under that 50 moving average. When that happens, we have seen some pretty big market sell-offs. And I'm just highlighting those right here. so that you can see. And this has happened again. So where will the first move be in 2023? The technicals are kind of telling me that the market is going to potentially, it might bounce a little bit at the beginning of the year, but is going to continue down to at least retest this area here. I want to say the 350 to 360 on the SPY. That would probably be a good target to eventually see if the bottom holds up. All right, and that's what the technicals are just telling me here. That's what everything is looking at the moment. We can see here, I'll pull up the volume profile. This will give you guys a better sense of what I'm talking about. So the point of control is right here. You see this line right here? This is the point of control, and that is right here during this consolidation. I think it's going to be very, very tough for price, which is right here. You can see this volume shelf right here. There's been a lot of volume taking place in this area. But if it comes up here, and it can, it's got a little room here. It's got a gap where you can see here, this is the gap in the market. But then you're going to see a rejection right around here. And that could be also a rejection around the 200 moving average. To get above that, I feel like since it couldn't do it here, is going to be very, very, very difficult. You have a greater downside risk where there's less volume, less support, right? And that's really what I can see coming here. And this is just looking at the technicals. This has nothing to do with the fundamentals, even though I do look at the fundamental analysis, obviously, with what I just went over at the beginning part of this video. But this is what the technicals are telling me. So we have two things going against us. We have the fundamentals in the market and the technicals, both suggesting some more downside, at least to the near term. All right, so that's what I'm looking at the moment. Just going to take off that volume there. And one other thing I want to go over here before I get into anything else is the Qs. So what I was saying here, we had that death cross back here, right? Happened March 1st or at the very end of February. Since then, the market has fallen almost 30%. Almost 30% since this crossed. Now these are, kind of going towards each other now. When they connect, who knows? But what we have here again is that 20 crossing under the 50. Bearish, 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 and bearish. Every time that's happened so far, it's been bad news for the market. All right? All I can do is look at previous patterns to potentially, now nobody has a crystal ball, anything can happen, predict the future. And that's all we're doing right here. Something I want to show you guys is, and what I really like to look at, what I'm seeing in this past year is very similar to the tech bubble. So what happened during the tech bubble? We had a huge run up in technology, even in the overall market. No market was really spared during this bubble. But back here in 2000, 2001, 2002, the QQQ went down 75%, guys. 75% in 3 years. We're currently at about 33%. There's a potential that this bubble that we're seeing here can definitely have some more room to the downside, especially with the Fed and the tighter monetary policy. So you guys have to realize what happens in the past doesn't necessarily mean it has to happen again. but these patterns tend to happen again. So, it's just something to be aware of. We saw some really big declines here for 3 straight years back during that tech bubble before the market then climbed back out. Same thing on the SPY, same thing on the Dow Jones, and that's just what we saw back then. It's rare to get 2 straight years of down years in the market, but it does happen. And the last time that it happens was the financial crisis, and you had the tech bubble. So it doesn't happen often, but it can happen during these really, interesting time periods that you're currently seeing. And I can't think of a better time than the COVID 2020. I mean, the Fed jumps in, creates a lot of money. It does seem like the perfect recipe to see a bubble and a deflation of that bubble. I'm a bull. I hope that doesn't happen, but I have to be aware of what has happened in the past to possibly happen again. And, we've been in a bull market for 13 years. There's a good possibility now that you see bond yields coming up again. They were really low for so long that we can see that deflation of this bubble right here. All right, so I'm just going to go into one other thing. I'm not doing any stock picks in this video, but I will do that next week. I want to, do a little bit more research for sectors that I can see value in for 2023 and some good picks to come up in 2023. But looking at the VIX, you can see here, this is the volatility that we're in on the year. You have support at 20, you have resistance up here at 35, and this is the range you're in. So when we're down here, this has been a good time to sell. When we're up here, this has been a good time to buy. That means that the market was low here, right? Back in the beginning of October, we went on a nice rally, and now we're here. All right, so it's definitely hanging in there. The volatility index has not spiked in quite a while, even though the market has been really, really rough the last couple weeks. So, we'll see what happens with that, but keep an eye on this. It tends to trade in a very obvious pattern. So, back here in 2019 and 2018, you kind of have this very similar area where it bounces off of, and then you get these real big spikes. That means there's really big down days in the market. So you just got to be aware of those and the possibility for that to happen. So right now, things are kind of calm, even though this is definitely an elevated VIX. It's calm right now. When will that next spike be? It looks like we have a lot of room here since our last big spike. All right, so that's it, guys. I know this was a lot of information, but I'm just kind of doing this, not editing it, and just doing it right off the top of the head after I do a lot of the research. So I hope you enjoy it. I hope you learn a thing or two. Hit that thumbs up for the video, and I'll see you on the next one. Take care, guys.